I've been getting just a ton of questions about appraisal gaps. What are they, and can I use them to help win an offer? Well, my name is Joe Gatewood, and today I'm going to explain appraisal gaps and provide you a strategy where you can actually win an offer using an appraisal gap without spending any more money. So let's start with a basic question. What is an appraisal gap? Well, the appraisal gap is the difference between the contract price and the appraised value. So as an example, if you win an offer for $400,000 on a home, and then you have it appraised, and the appraisal comes back at $380,000, well, that $20,000 difference is the appraisal gap. And what that means is that you will then need to bring that $20,000 to closing since the home appraised below the contract price. But what I would like to do today is share with you a strategy that our team is using where our buyers are actually winning offers using appraisal gaps without having to bring additional money to closing. So let me start with a very simple example. Let's say we first identify that the amount of cash that you have available for your purchase is $52,500. And you want to go out and purchase a home for $400,000. So you put an offer on and you win the offer, and you now have a contract of $400,000. So the first thing is have an appraisal done, and let's say the appraisal comes back and it comes back at $400,000. Fantastic. Well, knowing how much cash you have and that the appraisal came back at the sale price, we would then structure the loan and recommend that you put 10% down. Now, 10% of $400,000 is $40,000, which leaves a loan amount of $360,000. So that's great. Now, let's figure out then how much cash you're going to need for the purchase at all. So we know that the down payment is $40,000. Now, when you go to closing, you're going to have to prepay property taxes and homeowners insurance. So in this example, I'm estimating that to be about $5,250. You'll also have closing costs. And I've estimated in this example it to be roughly around $7,250. Now, the last thing to consider is an appraisal gap. Now, because the appraisal came in at the sale price, there's no cost for an appraisal gap. So all in, the amount of cash that you're going to need for the purchase is $52,500. So now let's discuss what happens though if the appraisal comes in $20,000 below your contract price. So we know that you have the sale price of $400,000. Okay, so then when the appraisal comes back, it comes back at $380,000. What do we know? We know right away that that difference, that delta, that $20,000 is the appraisal gap, and you're going to have to bring that to closing. So then what do we do? Because we know that you still only have that $52,500. We would simply restructure the loan, and instead of putting 10% down, we'd put 5% down. Now, it's important to note that that 5% is going to be based upon the appraised value. And the reason is because the bank lends on the sale price or the appraised value, whichever's lower. So it's the appraised value. So 5% of $380,000 is $19,000. That represents your down payment, which then leaves a loan amount of $361,000. So let's now see what kind of cash you need for the purchase, knowing that you still have just that $52,500. Okay, so we know the down payment's $19,000. We know that the appraisal gap is $20,000, and your estimated prepaids and closing costs should remain roughly the same. So all in all, you'll need a total of $51,500. Pretty simple, right? This is a great strategy that we're using to help our clients win offers in this tough seller's market. So there you have it. I hope that answered some questions about appraisal gaps, and it's going to help you win your next offer on your new home. If you have any questions, don't hesitate to reach out. My name is Joe Gatewood, and you can reach us at our company website, troycegatewood.com. Until then, take care.